Here, back here with another video. Today, guys, we are bringing you our morning market brief. So we're going to be looking at the things, the charts of interest for the week of the 24th of January 2021. So it's basically the last week of January 2021. So I'm the host here, Spo Dlamini, on our series here, morning market brief. So our risk disclaimer there reads that trading CFDs and leverage products carries a high significant level of risk. So a trader or a person is liable for a margin or entire portion of their margin requirements. So person should not trade money they cannot afford to lose. So do not trade money you cannot afford to lose. So that is just a risk disclaimer right there. So guys, we're going to check out Bitcoin, dollar index, the US 10-year treasury notes, euro dollar, S&P 500, Nasdaq, and going to look at gold, USD ZAR, J200 top 40, Anglo-American DRD gold, STEINHOFF, and as well as CAPITEC. So on the economic front, we see that there is going to be a lot of economic data that is going to be coming out this week. So for those guys who are trading forex, they should be very, very cautious while navigating the market this week. So we got some German number that is coming up, manufacturing numbers that are coming up, some CPI data coming out from the Australian side, the Eurozone business info index also coming out on Tuesday, and then on Wednesday it's going to be the most hectic and craziest day. Number one, there's going to be some home sales number that's coming out from the US side, and then number two, there's going to be the Bank of Canada interest rates decision, and also they're going to be pulling out their monetary statement. And also later on that day at 9 p.m. South African time, we're going to be looking at the Fed interest rates decision, and also the FOMC statement, plus the conference, the press conference from Jerome Powell himself. So I think this is going to be an important meeting. Why? Because it's the first meeting of 2021, and the Fed will not raise rates on this meeting. But however, what's important is that what will be on the statement, and also what will Jerome Powell say in the statement. I think he will signal that in March they may start the rates hike process, because like they said, they're going to be increasing rates at a higher pace. So on Thursday, initial jobless claims, and then on Friday we're gonna close off with the German GDP. So we've seen that on the crypto side, things have not been going very well for the crypto market. They have been very, very, very crazy on the crypto markets. We've seen that the crypto market has erased more than $1 trillion in market value, which is very, very massive. $1 trillion, it's gone in market value. The largest assets in the crypto market traded below 38,000, which was a key level right there. And as of today, it is trading below the 38,000 level, and is trading at 35,267. So looking at the other coins, okay, this page doesn't want to load. Okay, let us move on to Bitcoin. So my sentiment there on Bitcoin, it's still very, very bearish there. It is still very, very bearish. We haven't changed our structure there on Bitcoin, because if you're looking at the weekly charts, if we are looking at the weekly charts there on Bitcoin, we are still very, very bearish on Bitcoin. And someone said to me on Twitter, I think a day ago, that Bitcoin might actually collapse and fall back to 17,000. So there's a bit of extreme, but at times like this, anything can happen. At times like this, anything can happen. Because like, if you're looking at the structure now, this is a very big rising wedge triangle, and there's this double top that is here, which is confirming an M formation. So 17,000 looks very far, but for the crypto market, it's not that much of a problem, because this asset can fall 5% in a day. So looking at the US dollar index now, let us check out the US dollar index, which is DXY. So I'm not saying it will happen, it's just a scenario that we are looking at now. Okay, the dollar index, guys, it's gearing for a major move now. DXY is gearing for a major move. I've been looking at these charts exactly as it is for months now, and the structure is still the same. And every time when we are talking about this, a double bottom, a range, and a blast off, and then now there's this bull flag that is right there, a bull flag, which is a bullish signal. So we might see the US dollar hitting the 96 level perhaps sometime at the end of this week. And as well, we have some Apple earnings this week as well, so that might be the trigger of this, and also it might accelerate some markets movements there as well. So looking at ESPY. Okay, before we go to the S&P, let's look at US 10-year yields, US 10-year Y, because these things, they go together. And from the dollar, we go to the 10-year, and then the 10-year to the S&P 500. Okay, the 10-year yield, as we can see, that there is this structure that was here. Some can say it was a continuous head and shoulder pattern. This is the left shoulder, this is the head, and then this was the right shoulder. So now the market is actually pushing higher. So it actually broke off the neckline here, and now it's trading outside the structure. So we might see some bullish action. The 10-year yield actually moving high is 2.3%. So if the yield moves that's higher, it might actually cause some problem in the stock market, because if the dollar is strong and the 10-year yield is strong, it causes problems for stock investors. So looking at the S&P 500, SPXUSD. So here we are looking at the futures charts now, the one that is listed in Chicago, not the index itself, but we are looking at the futures chart. So what I'm seeing here, guys, is that you've been saying that the market was on this rising channel up here until it reached the top, and then it fell below which level? The 43.38 level. It fell below that 43.38 level, and then after, when it fell below the 48.33 level, we saw the S&P 500 closing below that level. And now what I'm seeing, what might happen is that when you're moving at the daily chart, something else might happen here. Come on, what's up here? Okay, my chart is actually loading slow here. Maybe if I could close the other, okay, my chart is not loading. Okay, but just to continue for a little while now. So we saw that the S&P 500 has been on this rising channel. So this rising channel, it signaled that the market is actually on a bullish trend. But now we might actually see the S&P 500 actually moving even lower to the 40 and 19 to 40 98 level. Why am I saying this? Is that we might see some action happening like this. That the market broke off the lower band of this channel, right? But now we might actually see it coming back to retest the channel. So to retest this level, the 45.38 level, and then the market might actually move lower. So we might see some positive action within the next 2 days, but then on Wednesday and Thursday things might turn around because of the interest rate decision and the what the Fed will say then, and also there's some April earnings that are going to be happening. April is going to announcing earnings. McDonald's is also announcing earnings. Visa and MasterCard, they are going to be announcing earnings on Thursday. So those are large companies there on the S&P 500. So looking at the NAS 100. So again, we are looking at the futures charts here of the Nasdaq. So the futures charts of the Nasdaq 100, we have quite a similar structure here, guys, because the market fell and now it is trading below this 14. It traded and touched the 14,300 level, which is significant. So Bank of America said on a statement that if the Nasdaq starts trading below 14,000, the 14,000 handle, things might really get worse for the technology companies that are listed on the Nasdaq. So we might see some bullish movement happening in the next few days. Maybe the Nasdaq will come back, retest the 15 to 70 level, and then price might actually start to move lower again, because the structure still favors the downside. So looking at we said we're gonna check out the gold, commodities. So looking at gold. So on the gold side, there's something that is happening on gold that hasn't happened in a while. So gold on the weekly chart, it was moving in an uptrend from the early 2018. It moved in an uptrend, but now since 2020 it has been stuck in this range. So this is about a 2-year range. It's been ranging for about 2 years. Now we might actually see gold actually breaking out of this range. So when it's break out of this range, price of gold might actually move to 1903 and moving as high as 1,988, even as high as $2,000 per ounce of gold. So it might be a continuation of this uptrend that which was moving, and then this is a symmetrical triangle that is here. So we might see a bullish pattern happening there on gold. So looking at EURUSD, so the story of USD, what's actually happening here, we've seen that the rand has been strong the past couple of days, let's say the past 3 weeks rather, because this is a weekly chart. Week 1 of January it was strong, week 2, 3 it was strong, but now it has entered a zone where there is an FTR candle here. This FTR candle, what did it do? It occurred when USD broke off this trend line. So now it's coming to retest that level again. So some orders that are here, there's still a lot of institutional orders which are here at the 15 rand level. So we might see things turning around for USD ZAR. So if you are trading USD ZAR, please be cautious. Please be very, very cautious, because this is in line with what is happening there on the US dollar index. So moving on to the South African side, let us look at the top 40, which is the J200, the top 40 index. So the top 40 index, it's almost the same as in the all share ALSI, the all share index. So we saw a pin bar there. Last week it closed the week on a pin bar. So a pin bar is a very, very bearish signal. So we might actually see some negative movement there on the JSE this week. Now we might actually see the market going lower and maybe retesting the 65,000 level, even as low as 63,000 level. So we might see some really, really bearish action there on the JSE as a whole. So another one we should check out is Anglo American. Let us look at Anglo American. Okay, Anglo American. So in line with what I just said with gold, in line with what I just said with gold. Since gold is moving high, we might see some gold stocks moving in line with what gold is doing. So Anglo American PLC, maybe the price might actually go higher to 806 rand there. Moving on with another gold stock there, it's DRD Gold. So when we are looking at DRD Gold, we are seeing that it hasn't been performing very well. I'm also invested in this one myself. Every time when I look at my portfolio, my heart just sinks a bit, because I'm actually down quite a lot on this one, but things might actually turn around since we are seeing gold is making that bullish pattern that it is making. Even here on DRD Gold, we are seeing this exact same symmetrical triangle pattern that is there on gold itself. So if gold moves higher, eventually it will try to drag all the gold stocks along with the gold companies, the gold shares along with it. So DRD Gold, we might have a fighting chance there. So another one we said you can look at STEINHOFF SNH. So the issue in the case of STEINHOFF has been like this. We've seen STEINHOFF has been trying to recover and regain itself. So we might actually see STEINHOFF actually bouncing on the 4 rand, on the $4 level, not the $4. We might actually we are seeing STEINHOFF actually bouncing on this zone, the 4 and 8 level. So we might actually see STEINHOFF retesting the 6 rand level, even moving as high as 8 rand 60, even as high as $10 a share for STEINHOFF. So this move might happen slowly, and it might happen in line with what the company is doing with their turnaround strategy. So the last one is CAPITEC, CPI. So CAPITEC there, what we are seeing here is that on the weekly chart, CAPITEC has been moving significantly higher, and then but last week it started to pull back lower. So the pull back, it means that it's coming back to retest this level, because this was a barrier here. This level here, the 2000 level was a barrier. So now we're actually seeing that CAPITEC is retesting that level, and if we are seeing and moving down to the daily chart, we might actually see that yes, it is telling us that this was a barrier, boom, it pulled away, and then it actually broke out. Now it's retesting this level, so we might actually see CAPITEC starting to move slowly higher to maybe 2022, and then even as high as 2500, 2516, sorry there, 2516. So guys, that's pretty much what are the charts that we are going to check out for this week. And remember, guys, remember that we are still here, né? Daily stocks still available for 550. The Gentleman's Club, it's 550, and for both forex and stocks, our premium channel, it's 850. So things are really moving slow on my side when it comes to the rebranding things. So the guys that I work with when it comes to the website, and when it comes to the graphic designing side, the guys that I'm working with, they also have other projects that they are doing, so I have to be patient and wait for my things. Some other things I do them for myself, but some others I just take it to the professionals so they can do it. So the ones that you see, guys, I just do them for myself, and when I have time I do it. So if you wanna hit me up on socials, they are my social handles. I'm much more active on my personal Twitter account. Even the Stocks for Hope account, it is much more active. In fact, all our social platforms are much more active. If you say something, we will respond within minutes or within hours, but we always get back to people. So our disclaimer there, guys, these videos are mainly for educational purposes, not trading advice or investment advice. So people are liable for their loss of margin deposits, so they should consider their risk appetite and tolerance. So do not trade money you cannot afford to lose. So thank you. I'll definitely see you guys on the next video. So thank you and goodbye.